Uber shares accelerating to the upside. The ride-sharing and delivery company reporting a bigger than expected third quarter loss, but revenue clocking in higher than Wall Street estimates. We're going to be breaking down those numbers for you. And SoFi is surging. The fintech company boosting its outlook, reporting stronger than expected third quarter earnings. SoFi CEO Anthony Noto will join us later in the hour. And Musk's Twitter takeover. Elon is reportedly bringing more than 50 Tesla employees to help build his vision for Twitter, but at what cost to Tesla? We have all the details coming up. But first, we're going to take a look at the stocks, and we can see Dow's down about 188 points, S&P 500 and the NASDAQ are each down about 0.5%. And if we take a look at the bond market, we're seeing yields across the curve a little bit depressed right now, except for the 13-week T-bill yield. That's not shown on your screen. However, we do have that eclipsing to the upside, the 10-year T-bill yield of 4.04%. We're going to be talking about that with a number of analysts in a second. And now we are taking a look at some of the latest corporate earnings, starting with Uber. The ride-sharing company surging after beating revenue estimates in the third quarter and delivering adjusted EBITDA well above its guidance. Here to break down all of this and more is Yahoo Finance's Pras Subramanian and Anjalee Khemlani. Pras, so give us a skinny on Uber here.
Yeah, so, very strong quarter here. Reached that revenue beat up $8.3 billion, up 70% compared to a year ago. They missed on the adjusted EPS last year, but kind of investors shaking that off. I mean, it's just a strong quarter overall with like a lot of their side businesses too. CEO Dara Khosrowshahi said in the statement, quote, "Our global scale and unique platform advantages are working together to drive more profitable growth." With gross bookings growth of 32%, record adjusted EBITDA of $516 million. So they guided that adjusted EBITDA to $600 to $630 million next quarter. Also guided gross bookings to jump 23 to 27% versus a year ago. So strong kind of numbers there. And also driver supply. We're seeing that up 70% year over year. So that's good for them. Now we have that Department of Labor rule potentially coming on classifying gig workers as full-time. We'll see if that goes through, but that's kind of an overhang there. But so far, so good right now for Uber.
And what about some of its competitors? We're expecting results from Lyft and the likes of DoorDash, and they're also subject to that same potential regulation, rules coming down with respect to those gig employees.
I think that they're not as well situated, especially at Lyft compared to Uber, because Uber has, look at this, mobility bookings of 13.7 billion, delivery bookings of 13.7 billion. Freight bookings, almost 2 billion last quarter. These are all like delivery and freight are side businesses that Lyft just doesn't have. Uber is also international, and they also have a car rental sort of service with a couple of partners. So Uber's just way more broader in terms of their offerings, and they're able to sort of weather this storm of any kind of macro headwinds. But also, I mean, just popularity of mobility right now, rideshare and also delivery is huge.
Yeah, I got to tell you, I'm still waiting for the prices to come down across the board after just surging like mad over the last year and a half here.